Welcome to the Trading Lounge and the Forex report, the Australian US dollar here on the daily chart. Now, the wave count that we've got, it is possible that we've got a wave 5 low in through here and we can move up from that point. I don't think that's the case because this particular move up through here is corrective, so we should see more downside here. But we are starting to see the market's moved quite swiftly through these points here, but it's really bouncing and slowing down now here, and we're getting very high rallies within all of this. So yes, the count is still lower, but there is some strong buying coming in from which we can see from the bounces, and that's what we're going to have a look at the moment. But just before we go there, as it stands, we are looking for a larger 5 waves down here in terms of 1 and 2, and then 1, 2, 3, 4, 5 for the third wave, the fourth wave here, and the fifth wave here to find the low here at that around that point there, So, but anyway, let's just drill in here and see what we've got. So we've got this nice wave 1 here, which is a really very nice impulse wave. So we should see a corrective wave, which we have seen in terms of an A and a B and 5 waves here for an ending C wave, and then we should see it roll over from this point here. And so we started counting 5 waves down for the green wave 1 here, and we have seen quite a strong bounce here. This wave 1's not finished yet, so we're looking for 5 waves in here, and we can see we've got a nice strong third wave here. But one of our problems is that we're looking for wave 4 here to pull back 38.2%, but it's pulled much higher than that, and we have seen this before in wave 4s in leveraged derivatives products like the dollar here. So we still need to go with the probability that we're still looking for 5 waves down here for wave 1, and we're not there yet. So this will be the third, the fourth, and the fifth wave here. So we're going to look into this wave 4 here, and this is what we were expecting. So from the high here we've got 1 and 2, and from wave 2 here we're looking for 5 waves down for wave 3 here. In this, I don't have this labeled correctly, but I have it labeled in the right way in terms of the actual count. Main point here is, sorry about that confusion by the way, but the main point here is wave 3 here. We're looking for wave 4 to pull back 38.2%, which was basically where that wave 4 is at the moment, maybe a tad lower from memory, and it has moved up quite strongly from that point, but we need to stay with it. It has overlapped wave 1 here, which is breaking one of the Elliott rules, but it happens when you've got derivative leverage products. So we have to stay with this wave 4. So that's what we're working through at the moment in this wave 4 here. Okay, so with this wave 4 here, well, first of all, I know it's corrective because from this move here in wave A here, we've got this first little move here, which this first little move here is corrective. We have this sharp move down, so we knew that straight away that this is corrective. That means it makes all of this corrective as well. So we are in a corrective pattern, and the best fit for labeling is wave A here. And I've pulled this apart here. It is in 3 waves, so we can treat it as wave B, and then we'd be looking for wave C to the upside here. This was the 38.2 retracement level here, so you can see the distance that's gone too far here, but at the same point we need to stay with it, and we're looking for 5 waves in wave C here, and it may be in play here, or we may see one more little high here to finish this impulse wave here, and then down from that point there. Now it could also move straight down from this high here as well, but it would need to find, if that was going to be a top, then the 76.20 would need to be the retested resistance at that point there, because it can pull back to the wave 4 of 1 lesser degree, or 38.2% of this move up through here. So it is fine where it is as a small fourth wave here. Do I have that here? Right, okay, sorry about this. So just going into the two-minute chart here, there's two ways of counting this whole wave C to the upside here, but at the end of the day, whichever way you count it, it still comes back as this being a possible wave 4 here, and we're looking for one more little move up here. This wave 4 here is roughly the 38.2 retracement level, and it comes in 1, 2, 3, 4, 5 for wave A, 3 waves for B, and then 1, 2, 3, 4, and then 5 waves here. There should be 5 waves in here for wave C. So that should be the low there roughly. So look, support on top of group 1, which group 1 is always 3. So if you see support on group 1, then you can trade up to the midpoint here at 76.50, and that's where the trouble resistance will start at that point there. So if support is found here, then on this level, top of group 1, then trade long to that, get out and wait, and then we'll look for the short side for this market. The pound Aussie has, it's sort of with the other markets, and it isn't in a way. First of all, just on the daily chart here, there's a different picture going on. We've had, it does look like it's part of a classic trading levels pattern, and a trading levels pattern, for a classic trading levels pattern, because really there's only two things that can occur at a level here apart from total failure and not stopping at all. But this is the classic trading levels pattern where we have the arrival, the reaction, and then the first high above the level, and then the large correction from that point. And that's the way that it pans out. So normally we'd trade to here, look to get back in over here, but of course we're doing currency, so we can pretty much get in and out wherever we want. Now, the question I have here is that I know that this move down through here is corrective, right? So I know that whatever happens below this level here, even if this comes down further, it's still corrective, because this first little structure in here is corrective. Okay, so I know that. Now, it can be the case where we have an A and a B and a C wave here, and then we just move straight up from this point here, 1 and 2 and 3 and 4 and 5, moving up through to here. So that can be the low in place here. The other count here, as I've probably mentioned before, is that we have a larger A wave here, a B wave here, and then a C wave in 5 waves coming down through to here, and then up here. So both are very valid. So we really need to continue to drill down within the structure. And you know, this had moved down through here, pull back to the 60-odd%, then it moved back to the 60-odd%, and now it's moving back up to the 60-odd%. So in a way, it's kind of diminishing, you know, through this space here, and we still need some more flickering in here before it resolves itself and sits on above the balance line or below the balance line. So we're tracking 2 counts here within all of this. So one of them is the positive count, where we're basically looking for wave 1 up, and we'll look for wave 2 back, and then further to the upside. The other count is kind of in line with the other markets that has been, this one's been rallying, and the other markets have been rallying in an ABC correction. So it can fail from a little bit higher here, and then just move down. So this is where we've got to, in this space here, we need to allow the market to work into this space here, and then we'll be able to choose which count is correct at that point in time. So with that in mind, this can be wave 1 to the upside, or it can be an A and a B and a C for the upside for wave 2 here. And if It just depends on which way you look at it, unfortunately. I can see that. I know it's a little bit sort of tricky here, but as a corrective move to the upside in line with all the other markets, then we'd look at this as 1, 2, 3, 4, and 5 here for the A wave here, and then the A, a B, and a C wave for wave B here, and then we'd be looking for 5 waves up in the C wave, and we have wave 1 here and wave 2 here. It may be 3, 4, and 5 and finish here and roll over from that point. So I need to get a bit of a grip on I need to see more here. You know, it needs to display a particular result so we can move from that point. So nothing really happening here in terms of a setup that's moving. We're not. It's not a clear count and moving into a nice setup. I can't see that yet. I need to establish the count first, then the setup, and it's not resolved just yet for that. The Euro Australian is a little bit more resolved in that it's a strong move all the way down here, very much like many of the other European crosses as well, is that we've got an A wave, a B wave, and we're looking for a C wave up here. The Euro is weaker. It hasn't moved up to its 50-60% retracement level here, and it may, and like with the Australian dollar as well and many of the other crosses, we can have one more little move up here before we see weakness come into play through here. So I guess the job for you is to recognize weakness, and if that comes in through here, it'll bounce off here, it'll come through here. It normally comes back and checks that trend line through there, and then we'll move down through there. So you'll need to work out what is weakness and what is not. So as it stands at the moment, we've got the A wave, a B wave here in 3, and we can count 1, 2, 3, 4, and 5 here. That could certainly be the top there, but I just want to see a clean. We want to see a clean break through here somewhere. Do you know? Yeah. So because that could have one more little high here with the other market, because maybe I've counted it wrong or something, and this looks corrective here as well. So it just needs to resolve itself a little bit. You know, I mean, even if it makes a new high here, or simply just retests this here. Just one moment. Let's just clear this up. So if it moves above here somewhere and then comes back and fails here and then finds, you know, you get that reference point there, well, then that's your short from that point. Okay, so that's the pathway for that. The pathway for this would be twofold. It would be the same as this here. So if it moved through here, then you'd have a reference point here, and you could use that. If the other side of the coin is that it could move, retest back up here, then this would be your reference point here and shorting through here. So you just need to wait for a setup. There will be other markets that will be leading to the downside, especially on the European side. So definitely keep an eye on those as well. The Australian yen, also, I like this. It's got a very clean count here as well in terms of 1, 2, 5 waves for the third wave, the fourth wave, and the fifth wave here. And then we're looking for an A and a B and a C wave to the upside here. So we still need to wait for the B and the C, of course, for this, but it's getting there. So we've got a nice impulse wave up through to here. So technically we should get some sort of corrective move. It may not come all the way back down through to here, but that's what we're looking for. And then the length of this one here will be roughly the length of this one over here, and then we can look to short from that point there. It does appear that we've got a little triangle pattern here, and if that's the case, then wave B would need to be placed in here as a triangle, because triangles normally occur in fourth waves or wave B, and that suits that there fine. So just drilling into that if you wanted to trade a little bit here. Sorry, I don't have a 5-minute chart, but I can say to you that if 91.10 becomes the tested support, then trade long from that point there, and you can look up at 90. 91.30 perhaps, even though it should go higher to 50, but support on 91.30, which is the top of group 1, 10, 20 and 30. Support on top of 20 will get you to the midpoint 91.50, but just trading to the 30, getting out, waiting for support, because there will be wild swings at 30, which can range from 91.40 back to 91.20, maybe back not to 91.20, but 91.25 is normally a bit of a norm in that swing across 91.30. So yeah, support on 91.30 can introduce swings from 40 back to 25. So you normally got plenty of time to move into that, but you need to get onto a 5-minute chart or 2-minute chart or a tick chart or something. All right, that's that. So thanks for tuning in. Cheers.